All right, so the content, basically I'm going to share on a few parts. The first part will be the micro E-mini its attributes. I think I'm really thankful that in today's market, they have this micro E-mini. So basically all these indices is made available to all retail investor. Then after that, I'm going to move on to the second part, which is the technical analysis. A lot of application, which I believe the application is not too accurate, is superficial. But the good news is I'm going to bring you to an understanding that technical analysis in the perspective of behavioral science, how to apply the behavioral science to it. Then I think the highlight tonight will be I'll be discussing with you about how to identify reversal. And it's not just a reversal, but those reversal that have weighting. How to identify those reversal that is weighting. And by the way, reversal, I'm not referring to catching a falling knife. It is different. But tonight, I won't be talking about how to identify trend, but maybe just since I'm on this saying right now, how to identify reversal is that we first have to identify the trend. So if we find that the trend is an uptrend, so basically we look for reversal up signal. Okay, so but I will specifically go into how to identify reversal up signal tonight. Then after that, especially those with good weighting, then followed by that, I think we will not be done without practical. So we're going to do quite a bit of practical here. I'm going to study into the E-mini Dow Jones, E-mini S&P, and E-mini micro E-mini as Nasdaq. Okay, so after that, we're going to reserve some about 5 or 10 minutes for Q&A. All right, now before I go, I think it's also good that I just do a bit of self-introduction. I studied engineering but never practiced on that field after I graduated. Started and worked as a floor trader and has been in this industry for the last 24 years. So over the years, I have developed a strong interest in forensic studies of the market prices and its behavior. Now, that has really given me an advantage in managing my own personal fund for the last 7 years. So apart from sharing about tactical investment and trading techniques with various partners and institutions, tonight with CME Group, my interest on behavioral science also leads me to work in those litigation process. For example, like helping the buyer and seller to resolve market arbitration disputes. All right, let's get the ball rolling right now. Let me just talk about the micro E-mini attributes. Like what I said earlier, in the past, it was almost not available for retail traders. We have the regulars, but now subsequently they introduced the mini, but since May, CME Group or CME introduced this micro E-mini futures. Now, since May this year, I want to take notice that later I'm going to mention about when we trade the market, there are two things that I'll always advocate that we should be looking out for. Number one is that the market must have volatility. And number two, the market must have liquidity. Now look at, it's a brand new contract or only about more than 100 days old. It's garnered a lot of attention worldwide. Okay, so it has not just volatility, but it has the liquidity. And this type of contract are really suitable for traders. Now, so when we invest in stock indices like S&P, what are we investing in? We are investing into a basket of, for example, the micro mini S&P 500. Itself, it says 500. It means that when you are buying a futures contract, it may be a futures, but technically later I'll explain to you how it works here, is that you're buying into a basket of 500 stocks. It's really meaningful. Now, let me just share with you the attributes about micro E-mini S&P. Again, in the past, all these indices are mostly not available. I wouldn't say not available, but it's almost difficult to get into it because it's so expensive. But now the new contract is make it so available for a man on the street to participate in trading the micro E-mini S&P. Now, this is how it works. When you see a view, whether you want to buy, go long, or go short the E-mini S or micro E-mini S&P at 3,000 points. Now, what does it mean? It means this. Now, first you have to understand there's a minimum contract movement. Minimum contract movement, it states that is 0.25 is equal to 1.25 US dollars. Now, it's a bit of mathematics here. If I got to times 4 on both sides, which is 0.25 became 1, and 1.25 times 4 is equal to 5. It means that 1 point is 5 US dollars. I think most of us will have agreed on that. Now, what if you see an opportunity, you find that at about 3,000 points, at this point is the time to buy. So what are you actually buying? Now, so you take 3,000 times 5 is 15,000 US dollars. That's why I call contract value, and some will say it's a notional value. It means this. It means something very precious to me. It means that yes, I may be trading, you may be trading, you may be using some leverage margin, but the bottom line is that the mindfulness is that when I see an opportunity at 3,000 points, it's as if, and I bought or I sell short, it's as if I'm buying a basket of 500 stocks, US stocks worth 15,000 US dollars. Now, how to do that? I mean, if you're going to buy individual stocks. So in the past, the contract size is much larger, but with this micro E-mini S&P, it makes it so available to man on the street. Now, that's what I explained earlier. Now, let me just move on to the next slides here and earlier explain on the micro E-mini. About 3,000 points, it worth 15,000 US dollars. Now you could see that since started, E-mini S&P have garnered the most attention here. This is a pie chart, and followed by the E-mini Nasdaq today at about 7,800 points is equal to as if you're buying 100 tech stock worth 15,600. Okay, so it's always a mindfulness about what is the contract value that you're buying. So yes, there's margin, but for how I trade the product is I put aside margin aside. Yes, there is margin, but I'm always mindful if I buy one contract, one micro E-mini contract, it worth 15,000. If I'm not satisfied, I want to buy more because there's a confidence in myself. At this point in time, I may buy 2 contracts. So 2 contracts for micro E-mini at 3,000, it represents 30,000 US dollars. So, and the other actively traded contract is the micro E-mini Dow Jones at 27,000 is contract value worth 13,500 points. Now, the next one I'm going to discuss about the technical analysis. Now, this is what I do not advocate, and this is what I felt that about 70% in this community that use technical analysis, whether is it for investment or trading, I felt that it's a very superficial way of dealing in technical analysis, which I do not advocate. Okay, so I just want to give you the example of the folly that most of us will get into. You may be using it now, but there's no right or wrong, but I just don't adopt this strategy. Now, typically in a chart, you could see a price, and the bottom half, you could see the indicator, all right. Okay, let me just, okay. Now, so usually what most of us will do is that we will have these 2 lines, the 10 or minus 10 or 100 minus 100. So if this is an indicator called MACD, and if the MACD track around the 10 and it kind of cross below, is indicating it's overbought, and it cross below it kind of signal a selling opportunity. And inversely, if it's tracked somewhere along the minus 10 or below, as it cross up, there's a buying signal. Now, I do not advocate this, which later I'll share with you how we should use technical analysis in a more and in another dimension, I would say. Okay, now let me just convert the MACD to histogram, okay, for you to have a better view. Now you can see there's a undersold, and there's a cross up, and maybe there's a buying signal. Now, most of us will find that, oh, it's a buying signal, I'll buy now. But of course, if you deal in leverage product, it's always recommended to have a stop loss, and say that after you bought, you put a stop loss, it cut below the entry price, and it got stopped out. So market went lower, and it kind of bounced up. Okay, so you make a loss there. Now, the next one, when the indicator is traveling near the plus 10 and it kind of crossed down, so you say that, well, okay, there's a selling indication right now. So you sold, and after you sold, you place a stop loss at maybe the recent high, and once again you could see that you got stop out. So there's a lot of frustration there. I would say that most of the indicators there are they are laggers. Okay, so and then again you try again. So it kind of waver up and waver down. It crossed down at the 10 line, and you sold again. And after you sold, maybe you got stop out, or maybe you have not. But after you sold, the market came down, but it's not enough for you to take profit. So you hold on for a while, and subsequently, the market for the next within the day or the next few days, it break your selling price and it crossed above, and it cut loss again. So you got really frustrated. Okay, so I believe when I say that, most of us will have that experience if you are using technical analysis in such a manner, which I say that is almost very mechanical, and you understand from what you've read, or because when they say cross up on the -10, you buy. So it's very mechanical. It's almost quite meaningless. Maybe I may ask you, but why is it so? What's the reason behind it? If it's -10 and it's cross up, what's the reason behind why it's a trigger for buy? So we have to know the reason behind it. The psychology behind it is even more important. Okay, let me just share with you a few more examples. Then we move on to the actual. Now, so there's another example. -10, it cross up, and you may make a purchase there. And this one is good, so the market kind of ramp up. Okay, so it's not always negative, but sometimes you may get it right. But you could see that before that, there's a lot of frustration before you get things right. But later I'm going to share with you how to spot for a reversal with higher weighting. Okay, so maybe one or two more examples. Cross down, and you may sell it. Then after they got stop out and the market came off. And maybe finally, after a few stop, you may say, okay, I'm not going to use stop loss anymore. Okay. And this time around, it crossed above 10, it crossed down, and you sell. And after that, maybe the profit is not enough. You waited for a while, and maybe today you are quite out of the money at this point in time. Okay. So this is early example, like what I say, is superficial, right? Now, how should we use technical analysis, or the other word is called charting? It is this. When we look at the chart looks exactly like this. Now, this is a chart, and to me, it's a picture of price. Now, what does a price means? Let me just go back to the earlier slide. Now, it means that when we look at a chart, we always analyze, this may be the live price right now we're analyzing on a S&P 500 monthly chart. We're analyzing from the left. Okay, all the way back to the left, we're analyzing the history of the chart. Now, the history, it compromises of a lot of interesting behavior. Now, we are analyzing into our human greed, fear, and confidence. Okay, just a very quick one in demonstration of this monthly chart for S&P 500. Now, we could see that that was in 2008 and 9. There was a collapse in prices, and that's fear. And subsequently, QE1 comes in. And market wasn't too sure. You have to understand that back then, QE1 was a new term, and market do not understand what is QE1. But the prices demonstrate to us that there's a gradual growth. Now, notice that the uptrend is about 45 minutes. It's no rush. It's about 45 minutes. So whenever you see such a 45-degree uptrend and it takes some time, it represents confidence, right? So I saw fear, I saw confidence at a point in time. And how about over the last 3 years, from 2016 to 2018? Now, this is what I see. I analyzed that since 2016 to 2018, now realize that how steep this S&P was. Now, I will interpret that. I analyze, and I hope that you can join me whenever next time when you look at a chart. It's a behavioral science, it's a market psychology. When you look at it, you have to interpret and decode it as perhaps there's greed in the market. Now, bear in mind that I'm using a monthly chart. Now, monthly chart, of course, we don't use monthly chart for trading, but I use monthly chart to analyze for my investment portfolio. Now, since 2016 and 2018, I acknowledge that market seems to have some greed, or the other word is called euphoria. Now, after that, my investment portfolio has been much reduced. It means that Am I holding a lot of US stocks for long-term investment right now? After that move, 2016 to 2018, my investment portfolio have much reduced because of this understanding. But having said that, as a trader, of course, then we look at a much smaller time frame, like daily chart, hourly chart, or 15 minutes is still an uptrend. Now, if the trend is still uptrend as a trader, or maybe you're a trader, I would advocate that you focus on one direction as much as you could. That means today for US market, since the trend is still up, I still buy on dip. But as an investor on the US stock as well, I'm much more measured. Why? Because S&P 500 on the monthly chart indicated to me there was some euphoric move between 2016 and 2018. I hope that this sharing is a little bit useful for you, that you will look at chart in a different manner. So later on, very shortly, I'm going to move on to how to identify market reversal. Okay. All right. Let me just move on to the next slides. Okay, so how about today? Like what I say, as a trader, I'll still buy on dips because the trend shows me that the US market is still uptrend. Okay, but please do not buy tonight because that's not my objective. Okay, so tonight, let's wait till the market open and we look at maybe the 15 minutes chart. Then we make assessment what is there for today and maybe for the next 2 days to a week. Okay. Now, so how should we analyze chart? When we look at a chart, like what I say, we are looking at a picture, and this picture represents the human behavior of, if you can still remember, of greed, fear, and confidence. Okay. Now, so when I look at a chart, it's not just charting, but we're studying into the behavioral science. Behavioral science is a big word, but I would say we're studying into the market psychology of the market. So behavioral science provides an explanation for why people make irrational financial decisions. So as you look at a chart, we have to look at, is there a lot of greed now? Is there a lot of fear? When there's greed, it represents that the market may have overbought. So then I hope after today you look at chart very differently in a new dimension. So whenever it's greed, perhaps there's an overbought situation. So whenever you smell fear, that perhaps there will be an oversold situation, and once the confidence comes in, maybe there will be a buying opportunity. Okay, so later I'm going to get to the practical side of things. Just be a little bit patient with me. Okay, we're getting there. Now, the behavior application on the structure of reversal up. Now, so if you study a reference book, let's say a Hammer, they will typically say that this is a reversal up. But later on, I'm going to give you my take about how to decode it in a behavioral science perspective. Okay, let me just have a drink here. Now, so in the reference book, when you study Hammer, they will say that it must have come from a downtrend first. That means the downtrend have to develop, then you see a hammer. Okay, so a hammer represents that it's time to buy. So maybe you could buy, you could long into the next period. So after you make a purchase, your expectation should be up. Okay, so now, so this is why I call, if you are doing that, there's nothing wrong to get hold of a book, you read it, but we do not follow it blindly, but we follow it with understanding. If you say that the hammer should, when it appear after a downtrend, then it's a call to buy. But I want to know, why is it so? Why after a hammer, there's a proposition for me as a trader or investor to buy into the market? I need to know why. Okay, here I comes. I'm going to explain to you why is it so. Okay. Now, so this is like psychology of a hammer. Again, let me just go through again, but I will deliver it with a storyline. Okay. Now, first of all, what makes a hammer precious is maybe the first rule is this: it must come from a downtrend. Okay, downtrend. So tonight we're going to have some practical on the 15 minutes chart. It must first have a downtrend. Maybe you have a look at 15 minutes chart, the last 5 bars, 10 or 20 period, there was a downtrend, or even 100, there's a perpetual downtrend. Now, then after that, So we acknowledge that the market is downtrend. If you look at 15 minutes chart, it could be the last few hours there was a bad news, data being released, and the number wasn't too favorable. So the market there's a continuously selling down. So we acknowledge that there's a bear market. It's a bear market for that perspective 15 minutes. So markets still continue heading down. And then after that, this is the next period. Let's say you're looking at 50 minutes. The next period, as you observe the market gap down, it traded higher. Okay. Then after that, continue the selling. So you may perceive that, oh, market, because of the last 2 hours, the poor data that have published, that it sent a shock wave to the market. The market continued to sell down. And this new period, that's the beginning of the 50 minutes, the market continuously have this negative sentiment and the selling persists. And there was volume and the selling continues and reaches low. Now, before, if you're looking at 15 minutes chart or candlestick, now before the 15 minutes complete, suddenly, now I would say that suddenly, maybe without a positive news, and you do not know why. And 2 hours before, there was a bad news, and market has been very bearish. The market has been selling. There was a reason, but before this 15 minutes bar complete, suddenly, without any positive news, okay, the market went up, purchased up, bought up, and closed around the high, especially there's no positive news. So now this became that's what I call a behavior science in studying just that period of 15 minutes itself. Now, what I'm going to share with you tonight is also applicable to other time frame as well. It is the same, okay? This could be a daily chart. So the whole bottom line is that it has to come after a bear trend, and the sentiment is very negative, selling persisted. And there was a reason why the selling persisted. Now, the key thing is that suddenly, without any positive news, the market buy up. It purchased up with great momentum and volume. So I would always encourage that as a trader myself, I always speak to myself, so there must be something good. I always develop this criminal mindset in myself. When I look at this behavior, so again, let me just repeat again. There's a bad news. Everyone acknowledged about it. Market continued to sell down. Suddenly, the market start to reverse up. So in my criminal mindset, I'll think that maybe there is a good news. Maybe the news is not available to me yet. Okay. So later we're going to do some practical exercise here. So now, then after that, my expectation is that now looking at this bar, I hope you can see my cursor. Now, as the completion of this 15 minutes period, as I look back, my belief is this. My belief is that maybe the low has been established. So whenever I look at a meaningful hammer, now I just explained to you, it's not just the structure of the hammer, but the story behind each hammer after a downtrend, the story behind them. So whenever I see a meaningful hammer being established, at this new juncture, after the period being established, the 15 minutes period established, now the new 15 minutes bar will appear, or the new period of daily chart will appear. Then I will tell myself that maybe as I look to the left, that this low, that the market low may have established. Now, once again, I have to say this as an investor or trader, when we look at chart or analysis, it's always relative. There's no absolute. It means that there's no 100% certainty. But once I can derive about 70% or even 60%, I think that's good enough. So when I see a meaningful hammer, the next period begins. Then I'll ask myself this question. I'll ask myself this question. I'll talk to myself, saying that maybe the market may have met the low for the time being. Now, if I can believe that the market may have met the low for the time being, the next action will be I'll take a measured risk and make a purchase, believing this low should not revisit again. So I make a measured risk, get into the market, calculate my measured risk first, how much to lose, then I expect for the best. Yeah, always prepare for the worst, but I expect more than 60% that the market should go up. Now, this is how I do it. Okay. Okay, so anyway, thank you for the patience. I have complete the structure of how to understand this meaningful hammer. Okay, now um, later I'm going to see that hammer appear everywhere, but which hammer will carry good weighting? Okay, let me just give me about some time. Okay, let me just prepare here. Now, so I'm on the topic of recognizing the reversal up. So my reversal up, I'm talking about hammer. Okay. Now, but I don't just explain it as a structure, but I tell you the story. I describe to you the story behind the structure. I hope you like it. Now, we could see that as we look at a chart, there is many hammers that appear from time to time. But how to select the hammer with the highest or a higher weighting hammer? Okay, now this is how it goes. Let me just we will do some exercise here. Okay. Now, so this is a 15 minutes S&P chart. Now, so whenever I use a 15 minutes S&P chart, I will be trading, okay? And I'm both an investor, I also trade, but if I'm free tonight, say my kids are not going to they're finished their schoolwork, I'm free, and maybe my wife do not want me to, she want her own quiet time. I have my own quiet time, then I will trade, okay? So family first. So now, then I would say that, okay, tonight I'm free, maybe up to 2 a.m. or 3 a.m. in the morning. I want to stay up. So I prepare to trade now. So the mentality is important. I prepare to trade. So therefore, I look at maybe 15 minutes chart. If I'm going to trade intraday, I may be looking at 5 minutes or 1 minute. But if 15 minutes, so I would say that if you're looking at 15 minutes, you should have a time frame, a realistic time frame. It could be intraday, or it could be maybe 2 days to a week. Okay, so there's no template on how this thing works, but this is how it works for me. Okay, now looking across this, you could see that on the 28th of August to 29th of August is about 2 days of 15 minutes worth of data. Now, this is something that I want you to take note of. Okay, before that, could you see any hammer in this 2 days chart? Okay, I hope you have spotted a hammer, but before that, let me just explain to you, so which hammer will carry weight? Okay, now then we explore in this 2 days of every period of 15 minutes period, what is a typical range of this 2 days 15 minutes chart? Now I could see that a typical range may be, now this is just some work done. You can do that on your part as well. Now, so out of these 2 days, my question to you is that can you identify a typical 15 minutes period range? Now, I roughly identify that maybe this is typical. It's a very normal range out of these 2 days. So there's this what I call the last 2 days dynamic that is as such. Seems like the norm is about 22 points. Okay, then maybe I try another one. Maybe this looks pretty normal out of these 2 days. The market dynamics or the 15 minutes range dynamics of these 2 days is about maybe 22 points. Okay, so we acknowledge that a typical dynamic of the last 2 days is about 22 points. Okay, now then after that we saw a hammer. Can you see a hammer? I will give you about 10 seconds to spot for a hammer. Okay, now my topic, my segment here is that which hammer, when you look at the chart, there's a lot of hammer may have appeared, but how to select the hammer likely to have a higher weighting. Okay, now I think you may have spotted that this is a hammer, but after that, we kind of figure out that this hammer is about 51 points. Now, earlier I discussed about the typical range of this 15 minutes period over the last 2 days. Typically, it's about 22 points. Sometimes maybe lesser. This is something that we're not too interested in. On this topic, I just want to dive into just look at hammer, okay, as a reversal up signal. So this is definitely bearish, okay, and the range is also very wide, but I'm not going to talk about it today because I want to stay focused on reversing up signal. Now, so typical range about 22 points, and we spotted this hammer, and we have to understand that as we measure the high and the low, how I get 51 points is that you take the high minus the low, you get 51. So as you reference to the typical dynamic range is 22 points, and therefore I find that it's about 2 times more, or sometimes can be 3, or some can be 4 times more, then I will recognize that maybe this hammer is something that I should take a closer look at. So now the psychology is this. Maybe there's some bad news going on over the last 2 days, and the market continued to sell down. So at this juncture, the market continued to sell off. Now, I'm going to tell you the story. Okay? The market continued to sell off, then suddenly, without any positive data, the market closed around the high. Okay, and the range is very interesting because basically what we're looking for is that period, that range. Is there a lot of participation? Participation of what? Participation of fear. Okay, the beginning is here. It starts here. That it seems like there's a lot of fear, and within the close of 15 minutes, before the close of 15 minutes, or at the close of 15 minutes, the market ran up and close around the high. Now, the trick of looking out for a good hammer is range, much wider than the norm. And of course, you have to understand the behavior science behind the hammer. Let me just repeat, or maybe poor theta performing. Market was bearish. And so this typical period is the same. Market open unchanged. It went all the way down. And after that, for no good reason, okay, there's no positive data, the market closed around the high. Okay, so I see a lot of fear, but within this 15 minutes, I could see a lot of confidence start to come out again. So the next flip of the 15 minutes, I believe, this is my belief, I believe because of this understanding, maybe that low has been established. So now once I can tell myself this, I believe the previous low, the recent low, the low has been established, then there is a case for me to get into the market with a measured risk. Now, as a trader, if you're going to trade, I would advocate derivatives. Okay. Now, derivative, of course, is margin, there's leverage, and it's always important to have a measured risk in mind. Okay. Now, I'm going to move on to our time flies. Okay, now I'm already 40 minutes into my presentation. Now I'm going to just beside hearing from me. So now I have kind of described to you how it works. We're going to go into the practical side of things, but after that I'm going to allocate about 10 minutes, the last 10 minutes for Q&A. You can ask me the questions, or maybe beyond what I've discussed tonight. Hopefully it's not too complicated, so for the rest of the audience will understand. Now, case study number 1, we will look at the micro E-mini Dow Jones on the 15 minutes chart. Now, again, this concept I'm sharing with you, it applies to all time frame, okay? But I just want to keep in good perspective, very focused on reversing up, and 15 minutes it represents, it could be intraday, or it could be a position between 2 days to perhaps a week period, okay? Now, so this is a 15 minutes Dow Jones, okay? 15 minutes Dow Jones. So my work for you is I'm going to give you maybe about 20 seconds to spot for a hammer that is, the range is much wider from its norm, okay? It's much wider from its norm. Look out for those hammer that is much wider from its norm. I could spot 4 of them, okay? I'm going to give you 50 minutes starting now. Okay, so where are the 4? These are the 4. Now, the norm, this is about 2 weeks data, less than 2 weeks. Now, you can see that the norm range maybe is about this much. Okay, so you of course, when you study this, the norm is always to the left, and you could see that the norm is about this much. Typically, over the last many 15 minutes, the norm is just that small. But these, you could see a hammer here. You could see that the whole range maybe is about 2.5 times wider, much wider from the top to the bottom compared to its own dynamic over the last many 15 minutes period. Okay. Now, so whenever you see a hammer, which one stand out to me is the hammer with much wider range compare to its own past. Okay, so this one makes sense. And if for me to trade intraday to um, 2 days to about a week, whenever I see this, so once again, at this point, I believe that the low has been established. So therefore, I would like to make an entry, and holding period maybe is between about 2 days to a week. So if I have this plan, now the plan have to come in mind. It have to be, you have to plan for a trade. It don't just come planning. What when I say planning, it refers to you already make a plan that today I may trade intraday. I may take a position from about 2 days to a week. Now, this is what I call profiling. Profiling is absolutely important because then you know how to plan, because you know all this saying that if you do not plan, you plan to fail. If you know how to plan, you will be successful. Okay. So my plan is maybe intraday to hold for 2 days to 5 days, something like that. So if I have this motion in mind when I spotted opportunity. So for typically for Dow Jones, my target is about 100 points or more. Okay, so for this entry, you could see that I believe that low has been established. So therefore, I do not mind to buy somewhere around here, not believing that the low will be taken out anytime soon. So I bought here, target at least 100 points, and it fetch beyond 100 points. Okay, so the next one is the same. I think from now on, we're going to move on a little bit faster. If not, we're going to be behind time. So this is the range of this hammer is much wider from its norm. Okay, so after that, market continued to trend up. So is this. The market continued to trend up beyond 100 points. It took about 2 days. This is you have to hold overnight position. Now, so this one is a negative example that you may ask me, Konhao, so is this still considered hammer? I say, yes, it is. You may ask me, why is it so? Now, the reason is because it opened unchanged. Now, it's always focused on the psychology part. Once you understand psychology, you were able to classify. Now, first is that this whole range is much wider from its own historic. That's true. Now, the behavior science on this hammer, it says this. Open around here, it went down all the way down. Maybe it's about 4 or 5 times from the norm. Then at the close, it did not close at a high, but it still closed off by quite a bit from its low and settle here. So I will still take it as something positive that I would love to have a long position with a measured risk. But obviously, this measured risk has been triggered and I have a loss. Okay, but it's fine. So like what I say, when you come to trading, you have to understand that it's never absolute. Absolutely means that there's no 100% certainty. But once you can measure up about 60% of probability or more, I think to me, that's good enough. Now, during this, I'm going to go through the next two examples in the E-mini S&P and NASDAQ. Hopefully by giving you more examples, you're able to really absorb and understand that. And at the end, I hope that you could apply it on your own trading. Okay. Now, the next one will be E-mini S&P. On the same period, I give you 15 seconds to spot for. So once again, the four hammer that is carry much weighting. Okay. Okay, I believe that you're satisfied with the timing that I give it to you. Ta-da! Okay. Now we have four hammer. Now, and you could see that for S&P, a holding period between 2 days to about 5 weeks. Maybe my target should be about somewhere around 12 points. My initial target about 12 points and all being fulfilled, 12 points. Okay, you could see this. I just maybe I'll give you some time to really appreciate the move. Yeah. So with a hammer, it start to trend up at least 12 points. With a hammer, it trend up. Now remember, these are the same period compared to the Dow Jones earlier. Now notice that this hammer is much more classic compared to earlier the Dow Jones. Now, however, the S&P, it did not trigger my stop. And there's a bit of waiting time, but I still stick to it. I wait upon it, and so finally it's pretty rewarding when it gap up. Okay, so no, this S&P did not trigger my stop, but you could see that the hammer is much more classic, and definitely the range is spectacular. And this is something that you should not miss, and I hope that you will not miss. But the downside is we have no control over the market. So the important thing is that build the confidence whenever you see something good, and also again have a measured risk. And sometimes you just have to trust yourself that you're doing the right thing. You just have to wait upon your success to come. Okay, so this is something that I hope that really speaks to you. Now the last one will be micro E-mini Nasdaq. Okay, now so it's the same period. You could see almost identical opportunity there, 4 of them. Okay, these are the 4. Okay, so once again for Nasdaq, between 2 days to 5 days, if holding period intraday 2 days to 5 days, my first objective, I hope to achieve about 40 points return from my purchase price or my selling price. So you could see very clearly. So once again, maybe the last example, I'm just going to give you some recap here, that the range is much wider from its norm, and is definitely a buy here. And after that, easily could achieve about 40 points. So is this as well. Okay, so it went up, gap up. So this one, 40 points, yes, you could get it maybe right on the top there. And after that, it's the same. If you still remember the Dow Jones that I shared with you earlier, is typical, and Dow Jones triggered my stop, but not for the Nasdaq. Okay, Nasdaq, the micro mini Nasdaq, it did not trigger my stop. Then after that, it's a waiting period, and it goes up. Okay, so I'm happy with it. I'm not too sure. I'm happy sharing about what I'm tasked to do, and I hope that whenever you see this, be mindful about the contract value. Like what I say for it's about 15,000 US dollars, that is so precious to me, and I'm a bit jealous about you. Why? Because I started this journey 24 years ago. That there isn't any micro mini Nasdaq. So it was so expensive. It's so difficult to carry a position overnight because it's so heavy. But right now, this contract is make it so easily available for all of us to practice. Okay, so before we go to Q&A, and maybe I give you if you really like what I shared, I can share with you the handout. Before I give you instruction how you can get the handout. So first of all, thank you CME Group for sponsoring this event and inviting me to share about this. I felt very privileged. Why? Because CME Group is the largest exchange in the world. And what I've shared is, I hope it'll be uploaded here ultimately. You could go to their website education. You can learn a lot about other stuff. In fact, when I was being introduced to this website, I'm thrilled because the next thing that I possibly would like to invest as an investor, I would like to invest is I want to study into commodities. I believe that the next major trend beside oil, it may be in the commodities. Okay, so they have wealth of resources here. But if you like what I shared tonight, so what you could do is that you click to education. There's a search mode. You may want to type micro e-mini. Then they will bring you to a wealth of resources about micro e-mini. There are videos. I just checked them out the last few days. It's wonderful. It's all easily available. It's free. Okay, do go for that if you can. And next, if you find that what I share is useful, you want to revise it, you want to get hold of the slides, please request. You can do the QR code scan and just request for me to send you the slides, the handout for you tonight. But please, I put in a lot of effort to prepare this. So if I send it to you, please study it, revise it, or you can email me. Okay. So please send a request within the next 24 hours, so I know it is from you. I will send you this stack of slides. Then, but give me another 24 hours. I'll email to you. Okay. So I think I'm ready for Q&A. Yeah, today is a monologue for the last 15 minutes. So now it's a Q&A time, and I'm not too sure if you can submit your questions. You can submit your question right now. And maybe this time I also want to thank you, Philip Futures, for giving us this platform. I want to thank you, Min Hui, that is facilitating the whole evening for me. So Min Hui is to you right now. And if there is or any questions right now for me.
Yes, Cornell, we actually have some questions.
Some question,
Um,
that's good.
yep. So, between chart patterns and indicators, which do you think is more reliable?
Okay, first of all, let me just explain about what's indicator. Indicator is what I've shared with you earlier. Remember the segment about superficial way of looking at things. Now, in the past, at the beginning, I used indicator quite extensively, but only later I realized that indicator it derived from the price and volume. Now, most of the indicator it derived from the price and volume itself. Now, what is the latest information? That means the most live information it is the price and volume. Okay, so indicator is being derived from the price and volume. It means after the price and volume being established, then somehow your charting platform will do its calculation, then your plot X, then it will show you an indicator. So the indicator, based on my experience, it is always lagging. Okay, so but I still use them. I use them to look out for divergence, positive divergence, negative divergence. I use divergence to give me a sense of the strength and the weakness of the market. For example, the US market right now, although it's still heading up on the daily chart, weekly chart, or maybe the monthly chart, but the indicator, if you're going to use it, is indicating a lot of negative divergence in today's market. So it represents that yes, market may be still heading up, but it's definitely speaking to me currently. There's quite a bit of weakness in the market right now. I'm referring to the long term. Okay, so I prefer the chart patterns. Chart patterns, why? Because the chart patterns, yeah. When you say chart patterns, I take it as yeah asking me about the price, and the price it is live. So chart pattern it fits me well because what I explained to you tonight, what I advocate about tonight is when you look at a chart, you have to in the position of studying and appreciating the price, the movement. Is there a lot of fear and greed? And can I say that it's a very typical behavior on the greedy people and the fearful people, and there's always a certain outcome that one example is the hammer. Yeah, so there's a lot of fear, then followed by confidence. So these are when I look at hammer itself, it is a studying of the price pattern. Okay, so maybe the next question.
Okay, the next question is, what is the difference between a hanging man and a hammer?
Okay, a hanging man. I do not use hanging man because I felt that the theory being described in the book they are all wrong. So because they do not understand what is a hanging man. And now, for the rest of the audience, what's a hanging man? Most of the author, when they wrote on the books, the hanging man, I suspect that some of the author may have cut and paste from the other authors. Okay, so now they say that on a uptrend, when you see a hanging man, it looks exactly like a hammer. Okay, but it's on the uptrend. Remember, just now I said the hammer it should come after a downtrend. Now, a hanging man, it looks exactly like a hammer, but it's on an uptrend. Okay, you do you want me to repeat again? I think I should repeat. Okay, so what I said earlier was the hammer appeared come after a downtrend. Okay, but a hanging man. Now listen to me very carefully. The hanging man it represents on the uptrend when you saw a hammer, but on the uptrend when you see a hammer is being represented as a hanging man. Now they say that when you see this is a bearish market, but I disagree. So why? Because now, if you understand about behavior science, about on what I said earlier about the structure of a hammer, now they say on the uptrend, when there's a hammer, it is a hanging man and it is a downtrend. But once you understand the structure of the behavior science of that hammer, it doesn't make sense to me. How could that be bearish? Because when the market is on an uptrend, then yes, there may be some fear. And after the fear, the market buy up with confidence. It's at the end, we could see that the market being purchased up with confidence. So to me, inversely, it represents a continuous uptrend. So I disagree with the hanging man theory. So because I understand about the market psychology. Okay. So do we have the next questions?
Yes.
Oh,
Okay, the next question, and I think this is the last question we should take in tonight. For the rest of the questions, we will respond to you guys via email. Yeah. So the last
email
question for tonight.
email means that I have much more work to do, isn't it?
Hi. You. Yes. Okay. So the last question for tonight will be: do you look for hammer to go long only after an established downtrend, or do they apply during dips on an uptrend?
Um, both, yeah. So maybe let me just give you something that I didn't share tonight here is that trend is the utmost important to me before I apply hammer. It means that maybe the second question is more I would do that. It means that first I have to establish where the trend is. If the trend is if the market currently, even for the 15 minutes right now. So, uh, um, okay, let me give you another perspective. Say, for example, today my profile, okay, I invest, I also trade. But let's say today my profile is my wife do not need me tonight, okay, so I'm free because she wanted to have own quiet time. I'm available. I'm available to trade for my own for myself. So I say, okay, I'll look at 15 minutes. So I need to study where is the major trend of that 15 minutes. Now, if that major trend for the 15 minutes is on uptrend, then I will look for an opportunity to buy on dips. Okay, so trend is important. Yeah, so I don't just casually just buy on a downtrend. But first, I establish where is the trend. If the trend for tonight or the last few days, it seems to me like an uptrend. So therefore, tonight, my focus, I will focus to buy on dip. So that's a retracement. So when a retracement comes, as it comes down, with a hammer appear, then I will be even more motivated to buy on that dips with a hammer. Okay, with the downtrend, there's a retracement. So if you understand what is retracement, it's on an uptrend, but on the retracement, a hammer appear, then I will be more motivated. Now you realize that it involved in some planning, but all this planning, I can tell you that is all worth it. Okay, so I guess that's the last question, and we hit right on time right now at 8 p.m. Let me just share with you how we can further connect here is that a lot of my friend asked me, so Con, how do you read into the macro trend? If you want to follow my Facebook, please do so. My Facebook name is Con Hao, my name joined together. So I will often publish a lot of news that whatever I read, I find is really interesting read. I will summarize it in a few points. I may give my take. And if you like my Facebook follow, when I publish those news that I'm reading, you will receive it. Okay, so some of them I write my own blog as well. So if you want, I will publish it on my Facebook if I've written any blog. So please go and like it. So once you like it, when I publish a news or whatever I read, you will receive it. Now the next one, more resources can go to my company website, waypedia.com, and of course, cmegroup.com/education is a deep wealth of resources there. So please go and look at them. I'm studying the soft commodities over there as well. Okay, so that's my Instagram. And lastly, that's my email address, conhao@waypedia.com. If you find that what I've explained is not thorough enough, you want to dig in a little bit more, just feel free to email me. And lastly, I just want to thank you